We have put in place a risk management framework guided by the recommendations made by the Financial Action Task Force, or FATF. Our framework leverages key sectoral players as designated non-financial businesses and professions, or DNFBPs, with the obligation to look out for red flags and report suspicious transactions to the police. This complements other DNFBP professionals involved in real estate transactions. The obligations apply to landed and non-landed residential properties, as well as commercial and industrial properties. In the real estate sector, our gatekeepers are A, property agents, B, property agencies, and C, developers. They are the first line of defense, as they are the ones who generally come into contact with parties undertaking real estate transactions. They therefore play an important role in the prevention and detection of money laundering activities in property transactions, the first two prongs of our AML strategy. As gatekeepers, each property agent, agency, and developer has a duty to perform CDD on their clients or customers. This includes verifying the identity of the client or the beneficial owner, screening these parties, and assessing their level of risk. For example, identifying foreign politically exposed persons, or PEPs, persons from countries or jurisdictions identified by FATF as higher risk, and maintaining records of the relevant documents. As part of the detection prong of our AML strategy, every property agent, agency, and developer is required to file a suspicious transaction report, or STR, through their respective agencies if, in the course of their business or profession, they know or have reasonable grounds to suspect that any property may be connected to criminal conduct. Failure to do so may result in regulatory action. Under the third prong of our AML strategy, which is enforcement, our sectoral regulators play an important role in ensuring that gatekeepers carry out their responsibilities properly. In the real estate sector, CEA is the regulator which oversees the property agents and agencies, while the URA regulates the developers. CEA and URA conduct AML-related inspections regularly. Property agents, agencies, and developers that are identified to be of high risk are prioritized for inspections and subject to more regular inspections. We would also like to point out that besides the developers, property agencies, and agents, professionals such as conveyancing lawyers, accountants, and financial institutions, or FIs, who similarly have anti-money laundering obligations, are also involved in nearly all property transactions. In sum, in the real estate sector, there are several layers of defense to mitigate risks of money laundering and protect the system from abuse. The gatekeepers cover different areas, but play complementary roles in strengthening prevention and detection in our regime. As such, the vast majority of purchase and sale transactions are subject to CDD checks in some form and at various stages. In fact, most of them are subject to more than one layer of checks. If any of the gatekeepers fall short of their duties or do not carry out their obligations, they will be subject to penalties. Enforcement is taken by CEA and URA, our sectoral regulators, who also work hard to guide our gatekeepers in their responsibilities.